The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Hi everyone, this is Basil Chapman sitting in for Tom O'Brien, and it's quite a session today in the market. We've got the Dow up 313 at 24,673. What's really important about this is that there's a trend line resistance. We've kind of made back everything that was taken out yesterday, and even more important than that is that we've got most of the indices also expanding to the upside. So the give back is really important. If you look at the S&P, SPX.X, I'm having a little trouble with some of the charts here. So the S&P is up 36 at 27.25. Even more important about that is holding the 9-period moving average in the monthly with just one more day to go, Thursday at the end of the month. The monthly candle in the Dow and the S&P is going to be very important. If you look at the QQQ, writing in now, the QQQ, I'm going to see if it can come up on the chart that you can see. Sometimes you have a little technical difficulty, and we try to handle it as best we can. Let's see QQQ, put that in right there, 1, 2, 3. The Qs are at this particular point, QQQ, I have to write in the playing with two different systems here, and you can see that the Qs are up, so typed in the wrong thing. We'll get it in a minute. But at this particular point, it's very important that the NASDAQ, which is being helped by the semiconductor index, the SMHs, which are up at this particular point, not up as quite as sharp as they were earlier on. Let's just see where they are at this particular point. Yep, they're up 0.61 at 108.05. Interesting thing about this, the reason why I'm trying to put the juxtaposition together is that the SMH as a semiconductor index held the 100.01 support in the monthly chart. Reason why I'm talking about monthly charts is that we are in a situation here, we've got 45 minutes and 1 day to go for the month of May, the candle of May to be completed. And the fact that we were down sharply yesterday, just a tad under the monthly 9-period moving average, and now we're sharply higher, that makes a big difference. And also the SMH, is the semiconductor index, the market vector semiconductor ETF, is helping the QQQ. And because it's helping the QQQ, there's this effect of giving support to areas that were a little bit vulnerable over the last few days and now coming back strongly. The IWM, this is the iShares Russell 2000 ETF, is actually at an all-time high. It's at 164.14, up 2.62. And talk about 9-period moving average, it's used that ever since it broke out from March of 2016 above this 9-period moving average in the monthly chart. This is the exponential moving average, and it's just sprung away from it. Every time it came to touch it, it was like a hot wire, and it just bounced to the upside. Very impressive. Now, this is going to be very interesting. Why? Because we're going to gold. And gold, if I can just get this right now, GC, gold is acting very nicely, considering that the dollar had spiraled to new recovery highs, and only now is making a little bit of a hint that is probably going to be having a consolidation for at least maybe a couple of weeks. But gold is up 2.2. It is holding well, and in this monthly chart, you won't be able. I'm afraid you won't be able to see that. I'll go to the GLD. I hope I'm able to get that right now. Oops, I typed it into the wrong chart. There. And which computer am I using? I'm using this one, GLD. Nope, I'm not. I'm using this one, GLD. I've got keyboards all over the show. Just, before the show, I had an issue with the technicals. Something happened. I lost some power, and so I'm having some trouble on the charts. There are the GLD right there. This is the daily chart of the GLD. You see the way it's been. The upper part of the trading band has been above 124. The lower part at one point was like a sine wave, did a lot of traveling down to the 118s, rallied back up to the 128, 29 area. Now you're back at the 123.38 area. But what's really important is that when I put into the context of the market, gold needs to break much higher to be able to say that it has the power to continue for a couple of weeks to the upside. Basil Chapman sitting in for Tom O'Brien. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman sitting in for Tom O'Brien. My service here is the opening call is my daily newsletter, and I do the Tiger Technicians Hour, noon to 1 p.m. every single market day. And right now, I've been on twice today, and now for the third time, It's just I have a problem with the with my different instruments, so it doesn't matter. We've got right in front here, you can see the USO, which is the crude oil. Crude oil pulled back very sharply. It's trying to bounce here. There's a good chance that the crude oil was going to have a little bit of a rest. It's had a spectacular run to the upside. Now I'm thinking it's resting, but what's really important is that the dollar made a high today in the Chapman wave methodology. It made a kind of a high that says now it could take a bit of a break, and if it does that, if it takes the break, then gold should be the beneficiary. So I'm really, for subscribers, we actually have the GDX, which is the gold miners, because we've been long the dollar since 90.07. It hit the 95s. It's down at 94.19, down 67 cents today. I think it could pull back to the 93s and 92s to test for a little while. But if the dollar actually holds up here, and I have to tell you, the weekly chart is still very, very strong. Maybe we'll wait for a couple of days and see, because gold needs to get to the 1335s to really say, hey, I'm ready to break out. I've been messing around for quite a while. It's enough already. I want to be moving higher. So I also wanted to show you the TLT, which is the, this is very important because it is the iShares, the 20-year Treasury bond ETF. This is the Lehman 20-year T-bond fund, and it's trading at 121.30. I would have liked to this afternoon. I was able to show it. I wasn't able to show it now, but I'll talk about it. The TLT, let me just go to it in the chart that you're looking at. Here it is, TLT. Oops, wrong TLT, TLT. There it goes. And here it comes. It is this Lehman bond fund. It's really saying bonds are going up. And finally, the yields are taking a bit of a breather. I would have liked to show you the weekly chart, because my weekly chart, we're always looking for the fourth highest peak D in the Chapman wave methodology. And lo and behold, we got that peak D a couple of weeks ago. Now we're pulling back in yields. That's the 30-year T-bond yield. That's what we were looking at, TYX. The 10-year is the TNX, and that is really one of the most important ones, because they use the TNX for mortgages, all sorts of things that have to do with interest rates. So that's really the most important, and that's pulled back quite sharply, and so is the 5-year, the FVX. So if bonds pull back, you would have expected that at this particular point, now I got to remember which computer I'm at. I'm at this computer here. I want to say that the XLF, which is this is really the S&P Select Financial Spider Fund. This is really the multinationals. These are the big banks. These are the banks that the money center banks, we call them, up 52 cents at 27.44. Not doing that great. And in fact, yesterday when the TLT spiked so much higher, and in fact, the last 3 days, the XLF pulled back sharply. So today it's at 51 cents, a nice move, but it really has to hold the 27s and get into the 28.50, 29 area, and fairly soon to be able to change its shorter term trend. But the KRE, which is the regional S&P regional, I went and typed it in the wrong place. Let me do it again. KRE, I'll show you the chart. KRE, and there it goes. Am I writing it in the correct one? Yep. So here we go. KRE, there it is. And that is showing you, I'm going to hit the enter right there, and that's showing you right here that overall it's actually held much, much better than the XLF, because these are the regionals, and perhaps they're seeing much more benefit from from businesses taking loans, etc. But what really is important about this is that it looks a lot better technically than the XLF, and the XLF has Goldman Sachs, and Goldman is not doing all that great. In fact, today it's up nicely, but today Goldman is up 2.05 at 229.08, but it's on the monthly chart. It's way underneath its 9-period exponential moving average. Needs a lot of work to see a good improvement in Goldman Sachs. So I want you to go through some of those areas, and most importantly, we're looking at, if I can. Now I've got to just remember which computer I'm on, this one here. So the VIX index, and this is quite fascinating, because the VIX has been going lower and lower and lower. It went suddenly into the teens, and now it's at 14.87, down 2.15. But yesterday it had a big spike. It was up very sharply. Today's down 12%. The VIX index, the simple way of looking at it, it's really a gauge, a measure of fear and greed. I don't like to look at it like that. I do look at it that way when I'm seeing fear. I don't know how you can get the greed part of it, but the fear is when it spikes, as it has gone to the 50 area back in right here. Let me just check where it was. Back in February of this year, it hit 50.30, and then back in, not here, not that one, right here, I'm looking at, in August of 2015, it went to 53.29. So here in the teens, it's not in the single digits, which it traded most of last year. It was in the single digits. So now it's saying I've established another level, and that level is just a tad under the teens in the 12s. But mostly I've been stuck in the low, very low teens for the last week or so. And that's going to be very important, because if at any point next week you suddenly see the volatility index start to push into the 16s or 17s, because the market has taken another one of those dives for whatever reason, doesn't matter whether it's news related or whatever the case is, that's where you're going to say, okay, is the VIX starting to establish a stair-step move where it's made a trading platform between, let's call it 11 and 9. Now the platform might be moving up just a little bit higher, so that it's going to be between, say, 15s and 13s. And maybe over the summer, we might see it moving up in stair steps like that. So this is something that's at least on my mind, and what I'm keeping, at least for subscribers, this is something that we're really focused on, where the volatility index is, and what's going to happen with volatility over a period of the next few weeks going into June, because June is where you get very quiet trading. You get a lot of people away or just don't do very much in the summer. A lot of fund managers, essentially we're looking at light volume as the tradition for the summer, and then it gets lighter and lighter. It gives people a real good chance to push the markets around, even if it's just short term. And so I had a couple of questions here about the VIX, my short-term Chapman Wave short-term trading index. One of the reasons why I anticipated that there could be a sharp move today between 9 and 11 points in the E-mini that would help the Dow and the S&P. We got there. Now, of course, it's double that. It's really much, much sharper. But that was a clue to say that yesterday was a little bit of an aberration from the overseas markets. And that was more an emotional pullback now that we've held quite so well into this final half hour. So we'll be back straight after this break coming up. Let me just see this particular computer right here. Let me give you the latest on the Dow, INDU. Basil Chapman taking a break. Dow's up 301 at 24,666, 24,663. We'll be right back after this brief break.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. This is Basil Chapman, and I'm back, and we're looking at this is LMT, and LMT is Lockheed Martin Corporation, and it's trading right now at 320.94. And let me show you something. There's a pattern that I talk about a lot. It's the H pattern, and it looks like this. You come straight down, you can see on this particular chart, and then you make an arch formation. So Lockheed Martin had made a high, and that was an all-time high, and that was back in February, around about the 364 level. And it came down very sharply. It came down to the 324s, and then it rallied up to the 360. And now you start this particular phase right here. From the 360 level, it comes plummeting down. It goes down to 300. That, 60 points. And this is in the whole defense area. That's a lot of points. That's a big percentage move. And then it makes a rally. And I'm suspecting that the defense stocks are going to take a breather based on my monthly work. The monthly chart suggests, based on the technical starting to fail and the price is just testing the 9-period moving average, that we could have a little peaceful moment, in other words, internationally, and the defense stocks actually pull back, and that H pattern would say it is alive and well and trying to test the 300 level again if it closes any day under 317 to 316 support. You close under 316, I think it'll go all the way back to retest that 300 level. Now, this is very interesting because underneath the sector, you've got that sector is actually the PPA, which is the ETF for it. You've got Boeing, which is up today almost $5 at 357. The all-time high that it made, and I need to go to this chart to check the exact price. I should remember, I think it was 351 something. Yeah, 371.60. It's had a struggle to get there. Now, this is not, it's in the defense sector, but really this is airlines. This is to do with the travel. It has to do with leisure. It has to do with businesses. This is not defense per se. So it's had a much better rebound. So I'm watching Boeing very closely because if at any point Boeing starts to take out the support at 343 to 341, that's a long way down, but these things move very quickly, then I suspect that Boeing's in for a much longer and probably a deeper consolidation. So I just wanted to, I had a couple of questions about that. Also had a question earlier in the day, which I'd like to get to again, which is, let me see if I can find it here. So this is this particular computer. So it's CSX, which is CSX in the rails. And I think Buffett has a large portion of CSX. So here it is at highs. and I'm going to give you some information about it, which I think is really relevant, because if the IYT, which is the iShares, basically it's the Dow Transportation Index as an ETF, the iShares. So you've got CCSX up $1.35 at 65.57 at an all-time high. The weekly chart is very strong, and it's only in leg C in the Chapman wave. If you know anything about the Chapman wave, we're always looking for the D is where other things can happen. This is still in the C in the weekly with very good technicals. So if the transportation index is able to, not just in the next few days with the end of the month buying and maybe beginning 1 or 2 days of June, but if you're going to, a week from today, if you're looking at the IYT, and let me just put this in right here, the IYT, so you can see what I'm talking about. The IYT, I've got it over here. I need to type it in there. So the IYT is trading at 197.20, up $3.33. It's at what we call a recovery high. In other words, it's way off the all-time high, but it's in a recovery high. In the weekly charts in leg D, in the daily it's just gone to a leg E. This is all very good action so far, and the monthly chart is acting very well. If it's able to, if the IYT is able to get to its all-time high in the month of June, 206.74 breaks out to a new all-time high by 1 penny. So being the transportation index, which can move very quickly when you get the airlines have benefited from the decline in oil, the sudden decline. So we're going to be watching this very closely. Most importantly, what I'm looking at is if you can get if the IYT, the transportation index, manages to rally strongly over the next 2 weeks, it will give a Dow confirmation signal. If the Dow has a very strong rally, the Dow doesn't even have to go to its all-time high of 26,616. So I'm looking at this and I'm saying, what could go right? Now, here's what I'm a little concerned about. Within the context of the markets, I haven't moved the IYT up so you can see it very well. You see the lowercase h in the IYT that becomes a lowercase m? But at the same time, we've broken above all the previous highs. So that's very good. That negates the pattern of the H that goes to an M in the Chapman wave methodology. What it says is you've taken out all the resistance and now you're fresh. You're going to have to look at the left side for previous highs. To do that, the Dow would have to break above, and this is going to be very interesting. The Dow would have to go to 25,800, and let me get the exact price, INDU. The Dow, it would have to get to the previous high of 25,000 made in the week of the 2nd of March, 25,800.35. It goes to 25,805 or 10, nicely above. That's a breakout. That's going to be very important. Hey, wait a minute. That's 900 points from where we are. So I want to just take a moment to say, in the patterns that repeat over and over, this lowercase h that goes to a lowercase m very often has to make yet another test of the low. For the Dow, that would be in the February low of 23,003, I think it was 50s, and then there was another slightly lower, that's right, 60 and then 46. So 23,346 was the low that was made in April. But none of the other indices went to another low. They all held much, much higher than the February low. And that to me is important. And that's the reason why I've been saying to subscribers, we want to be looking at this as range bound between about 25,200 and 23,500 in the Dow. And a break of either one says, aha, now we can start tackling the most important high, that's the 25,800 level, and the downside, watch out, because 23,300 is absolutely sacrosanct. You don't want to see a move below that, because that sets up a whole set of parameters. For the S&P, for people looking at the S&P, I would say shorter term 2752 is the resistance, and the key support is at about 2650. You take that out, on a weekly basis on the downside says, oops, that's that H to M pattern. You're going to start testing the lows. And on the upside, certainly a move above the high of 3 weeks ago, 2742.10 would be positive. So, Basil Chapman, host of Tiger Technicians Hour, 1 o'clock every day, at 12 o'clock every day. Sitting here for Tom O'Brien, the one and only Tom O'Brien. My pleasure to be here. I'll be back straight after this message.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi everyone, Basil Chapman here, sitting in for Tom O'Brien. The IBB, this is the NASDAQ Biotech ETF, is trading at 108.57. If I look at this and I'm running, look at this parallel line here at 110 and look at the line at 100. You can see that most of the trading since a year ago, maybe 11 months ago, has been within this range. And today, a very nice day, IBB is up $1.38 at 108.46. This is going to be important, and I'll explain why. If fund managers start to see some sectors that have been kind of moribund or just stuck in a range start to act quite well, it means that even though maybe they're nervous about the cyclicals, maybe they're nervous about the financials, maybe they're nervous about certain sectors like high-tech, within the high-tech sector that are already up at highs and they just don't want to be buying there. So they're going to be looking for sectors that were lagging. So I'm keeping my eye on the IBB. We were expecting a leg D today in the Chapman Wave methodology, and this is the spike that occurred, and it is leg deep. But the technicals, the MACD, the moving average, convergence, divergence, is still very strong. And the stochastic is at 84%. I love when it's over 80%. So this is very good action. So it says to me, and if you're looking at the Dow is now pulled back from its intraday highs. It's still up beautifully, up 292 at 24,653. The S&P is up 33 at 2723, and even the composite index is having a really good day, up 66 at 7,463. I'm looking at this and I'm saying the Dow has a long way to go. It has almost 2,000 points to go to its all-time high. The S&P also has a long way to go to its all-time high. So the consolidation that's been taking place, the rally now is wonderful, except I'm looking at it and there are just certain sectors, certain stocks that are acting very well technically as well as price-wise. If you look at the Dow, it's rallying right now, and this particular leg, did I go to the wrong area? Yep, I went to the wrong computer. Let me just type it in here. INDU, the dollar INDU, this is the Dow daily. Beautiful, beautiful action, except it stalled right at the 9-period moving average, couldn't break above it. It went above it for a moment, but couldn't hold above it. And the MACD is still quite negative. The stochastic is down at 55%. So there's a lot of work to be done. And that's the reason why I wanted to spend just a moment to say that within the context of that pattern that I speak about, just think in your mind, think of a lowercase h. You've got the back that comes straight down. In this case, it's usually a little bit of an angle. Then you've got that arch formation to make the h itself. And then the retest of the left side low, and the Dow is the only one that took out that left side low. February low was taken out in April. S&P held beautifully way above it. The Qs, the NASDAQ, Index 100, way above it. So, and IWM way above it. So this says to me that the arch that goes to a second arch, lowercase m pattern, is really the theme that has been in progress for a long time since the February low. And therefore, until that changes, that's kind of what I want to be looking at. I want to be looking at it and saying, aha, when I see the Dow break above 25,200, it says, aha, this is good. But it's really 25,800. That's going to be absolutely imperative to take out. Doesn't have to be in June, it could be July, but it needs to be taken out. And the sooner the better. Otherwise, the stalling formation says, oh, you know what? Now we're going to have to test the lows. But the fact that one by one, you've got the IWM, the Russell 2000, making an all-time high. And just to recap, the IWM at this particular point has a weekly chart that is building strength, and the stochastics at 93%. I love over 80%. I love in the mid-90s. That's really good, and flattening out. It just says you've got fabulous support. That fabulous support in the weekly chart is at 159 to 157. Very good support. Monthly chart is still very strong. The daily chart has extended up, and although the technical started to weaken, the actual spike is going to be important. And here's one of the reasons why. In fact, I'd like to do this. I'm going to go to the chart right here. IWM. I'd like to go back just to show you how when you get a certain chart formation, you want to see follow through. So there's a little line right there at the end. Unfortunately, I can't move this sideways so that you can get an extra couple of bars of space so you can see how strong this candle is. And this line is moving higher. The MACD is deflected positively. That's a good thing. Stochastic is still pulling back. It is under 80% at 79. And the on-balance volume is lower than it was when it made the top right there. And in this case, the top was made, previous top was made at 163.33 on the 22nd of May. And we've had 5 sessions, and this is the 5th session, breaking out to the upside. So what's going to be very important is that over a period of going into Tuesday, I'd probably say Wednesday morning of next week, Has the IWM climbed into the 164.50 to the 165.35 area and held nicely, turned the 163s into support? Or is this an isolated event, a kind of a relief bounce? And it's going to pull back and it's going to test the 161.80, let's call it 161.50's 9-period exponential moving average support. And if it does it really soon, starts doing it by tomorrow, and by Friday it's pulling back and taking out today's low, and by Monday it comes down even more, then what I'm looking at is the chance that we've at least made a short-term top, and we're going to do some more retesting in the overall market. So those are the parameters. Let's do it again. IWM, Russell 2000, trading at 163.86. A push into the 164, say 70 area to the 165.25 over the next 2 sessions would be really good. So I believe I have a call, and I'm just going to say, hi, how are you? I'm not sure who's there.
How you doing, Basil? I've got a question. I'm looking at AutoZone, and would you think about shorting it at this price, or do you think it could creep up a little bit higher?
So AutoZone had really a spectacular turn of events the other day. AutoZone is AZO, trading right now 654, up 24. It had a news-related spike the other day to on the 22nd of May. It opened at round number 700. I always look at these round numbers. It had a high of 710.00. Do you know how hard it is to have round numbers when you're at that level in the 700 area? So 700 round number open, 710 was the high, and it closes at 602. Round number low, going to 601.53 was the actual. So this is an incredible bar. It's probably a bar for the history books. But the next day it makes a slightly lower low and then turns around and it starts to climb. Now I have an expression that a rectangle formation can last a lot longer than your patience. One of the things I'm looking at is I would be grabbing, you can't see it right now. let me just do this right at this moment. We've got a break coming up, and let me do a little analysis, see if I can get it onto a chart that everyone can see, and then I'll tell you what I'm going to do. First of all, I'm going to say I don't see it as a short right now, but I'll explain why and what I would do, how I would treat it as a short if certain conditions were met. We'll be right back, folks, and we'll be back with Mike.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. We're on with Mike from Ormond Beach, Florida. Now what we're looking at is AZO, and AZO is trading at 653.90. It's up $25. Most important is that it's hitting the 200-period exponential moving average in the daily chart. But what I like to look at is, for those of you looking at the charts right here, you'll see that that long spike, the one we were talking about, where it spikes higher to the round number 710 high and pulls back to the 600 level, that I usually draw a rectangle around it, and then my expression is that within it, you should get an inside in a shorter time frame, a peak A, peak B, peak C, and peak D, as long as it doesn't take out the gap, the low that was made. And this so far, I would say to you, it's trading at 600, let's go to 654. Start looking at it between, oh, I had that number just now, between 663 and 669, I believe. Yeah, 663 and 669. But you know what I will do? I'm going to do a little work on it, and tomorrow during my show at noon, my Tiger Technicians Hour, we'll look at it. I'll look at it again in more detail. My charts will all be back. This is not the usual chart that I use. Thank goodness I had this as a backup. But my charts show the daily, weekly, and everything, and it'll give you a much better picture. So you have a little patience. I think there's a chance that stocks that have these big red bars tend to repeat that periodically, and it's had that back in this year. It's already had two very ugly red candles, and I think something's going on with that auto parts company. And you know, cars are lasting a lot longer now, so maybe they're starting to feel the effects of manufacturers improving the quality of cars. But let's look at it together, and give me a call. We'll look at it, and I'm waiting for a little bit higher. Then maybe it'll make that arch formation.
Okay, Basil, thank you, and thank you for filling in for Tom today.
My pleasure. Always a difficult thing to do, but thank you very much. Question about Macy's. Let me see if I can get Macy's here on this particular chart. Macy's, M is the symbol, and Macy's right now is trading at 35.54, up 71. Still very nice. These retailers, some of them are doing very nicely. Thank goodness Macy's is so far surviving well. So this is Basil Chapman sitting in for Tom O'Brien. My usual show is at noon every day. And stay tuned. You've got Steve Rhodes sitting in for Tom coming up right now. And we've got the Dow closing up 309, 310 right now at 24,000.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday. Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Good afternoon from TFNN. Welcome to the May 30th. Wonderful Wednesday edition of the Tom O'Brien Show. I'm your guest host, Stevie Perseverance Rhodes, filling in for Tom, and I believe that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. You and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 4 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, you can always send me an email. Let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow, which closed up 306 points. Closed at 24,667, up 1.25%. S&P up 34 points. That was 1 3/10%. The NDX 100 up 0.7% or 49 points. So green across the board. If we take a look at the SPY, let's start by taking a look at the SPY. Closed the session at 272.59. That is inside the prior swing point from the trading day of May 22nd. Now, on that date, what the SPY did was 52 million shares. You close inside the swing point, you do with more volume, which it did. 64 million shares today says you're going to go test the high. Anticipate that the SPY will go test that high of 274.25. If we go take a look at the NDX 100, we'll do that via the Qs. We're going to see that they are trading inside their swing point from May 14th. That had 21.8 million shares. Right now, and volume is just completing here, about 21.2 million shares. So similar volume, but ideally, well, what should occur is that the Qs should go test that high, 170.82. If we go take a look at the IWM is completing an A to B equals CD pattern out here. There's several of them. But what the IWM should do is be able to get up to that price level of 164.98. That's the one-to-one lightning bolt or A to B equals CD pattern. That's starting from the lows out here of February 9th. That's your A point. Your B point is March 13th. Volume of 17 million shares out there makes a 0.73% retracement, a 73% retracement on April the 2nd. It passed that B point, which had 17 million shares. It does it with volume. That was 21 million shares on May 16th. Your one-to-one read is at the 164.98. Now, not all A to B equals CD patterns complete at the one-to-one projection level. This may be an expansion of that. And the expansion would take you up to 169.82 out there. What's important? Like Peter in the Tiger's Den said, the spot volatility index closing down, I've got it at 11.93% as we speak. It is a minus 11.93%. Now, for those of you that aren't familiar with me, I do a show for TFNN. I do that at 1 to 2 each day. Yesterday, as we were taking a look at the markets moving lower, what we noticed was that the spot volatility index was down, was up by a one-day rate of change greater than 10%. What do I mean by that? You simply take the close of the prior session. In this case here, it was Friday's close. You compare that to where it's trading, and that's how you would calculate the one-day rate of change. What's important about that with regard to the spot volatility index, the VIX, is that it's a really important tool when we understand when there's a one-day rate of change greater than plus 10% or below a minus 10% reading. Well, we had one yesterday. Why yesterday? Because when we see that, and if you're watching this on Tiger TV, you'll see blue arrows on my screen of the S&P 500. Those are days that are designated when you have a spot volatility index above, with a one-day reading above that 10% level. Now, oftentimes you'll see a market cruising lower. And there are probably a lot of people yesterday went to bed, put their head on the pillow, said, you know, the Dow was down 400 points. I probably should just go short. Many people even doing it in the aftermarket out there. You do not want to do that when you have a one-day rate of change greater than 10%. Why? Just look at my screen. You either get a bounce or a bottom inside of the market. Well, at this stage, which one was it? Well, here's what we also know. Today is a minus, as I said, well, right now it says minus 12%. So it's down below minus 10% out there, spot volatility index. That can lead to an initiation move to the upside out here. And what you're looking at on my screen is you're just trying to go back and identify those back-to-back days where we see a one-day rate of change greater than 10% and a below minus 10%. Whew, that's a tough one. All you have to do is go back to February 8th as an example. That rate of change is down to the upside, 20.66%. The very next day, minus 13%. What did price do? Continued moving higher. How about one just recently? Recently, we had the exact same situation take place right here. This was on March the 1st. That rate of change, the upside, 13%. To the downside, the next day was a minus 12%. Price moved right back to the prior swing point. That's what I anticipate the S&P 500 will do. We just, in essence, got a double confirmation of that, didn't we? Because the SPYs have enough volume as they're trading into their swing point for May 23rd, says that the top ought to be tested, May 22nd, I should say. So in the case of the S&P 500, we're looking at 27.3834. So it's really important to be able to utilize the spot volatility index and understand those rates of change. There's another use of the spot volatility index, and that is this. Where is it trading in relationship to its 50-day exponential moving average? As we close the session, the spot VIX closing at 1490, the 50-day exponential moving average, 1571. We're back below it. What does that mean? The S&P 500 moves sideways to higher when the spot volatility index is down below the 50-day. So everything that we're looking at this stage of the game is in place for the market to continue higher tomorrow. Now, that would make a lot of sense, right? We're into the so-called period of window dressing, the end of the month out here. So that's what you should anticipate as we go into tomorrow's sessions. Now, the question becomes, how high can price go? When we get back from this break, we'll go take a look at the resistance levels for the ES Mini, for the NQ, because you'll want to know those as you take a look at the futures market come tomorrow morning. This is Steve Rhodes, filling in for Tom O'Brien. We'll be back in just a few.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for this hour out here. And before we went to the break, we started discussing levels of where the market should move to. So as futures open, or tomorrow morning, as you take a look at futures, first, don't be surprised if the ES Mini is trading up towards the 2741 level. 2741 is a resistance area. We may not see the ES Mini break above that. Now, if we do, then we have a real breakout party going on, because that is the resistance. That is the top of its TAS market profile on a daily basis out here. Inside the NQ, right now we're trading at 69.87. Close at 69.87. So 70.1350 is the price level that you will be looking at. That should be resistance out here. In the case of the Russell 2000, an absolute mind of its own. And so it is trading above resistance. Does that mean that it can go on forever out here? Well, it can certainly go higher. And maybe you're asking yourself the question, why is it moving higher? The very simple answer is that you just need to understand where the money is flowing across the world. You see, you and I, we take a look at our screens and we think in terms of dollars. You're going to go out for dinner tonight. Maybe you're going to go to the bar. You're going to go to the grocery store, take out whatever it is. You're paying for it in dollars. You look at a chart and you say, you know, the Russell 2000 closed at 1647, a new all-time high. Everything looks good there. Well, we are a one world market. If we weren't, then there really wouldn't be a big issue with regard to whatever may be going on or may not be going on in Italy, Spain, and so forth. We are interconnected. But money has to flow somewhere or some places out here. And it's really up to you and I to identify where those places are, where the money is flowing. The one place where the money is flowing, one of the places, I should say, is the Russell 2000. If you take a look at this set of charts that are on your screen right now, the left-hand panel shows the Russell 2000 on a daily basis in terms of dollars. Broke above a swing point. That previous swing point was from last week. It was at 1639.88. When you break above a swing point, it's like a B point of an A to B equals CD. It's above resistance out there and says you can continue to move higher. No false breakout, not at least just yet. If we take a look at the Russell 2000 in euros, it is at all-time highs. It did that on the trading session, by the way, of May the 9th. So May 9th, you had the Russell 2000 breakout in euros. So those folks that were breakout traders that were sitting in Europe, who are trading euros because they're paying for dinner in euros while we're paying for it in dollars. And we have to understand we have competition, or we have traders on all across the world out here, but they are thinking in terms of their local currency. If they see something breaking out in their local currency, they are more apt to go ahead and buy that. If we take a look at what traders inside of Japan are doing, price is so price is not at a new all-time high, but it took out the highs from January 19th today. So that was one of the old highs. That's when that's in essence when the Russell made its highs in the U.S. and price closed back above that. So where the Russell 2000 traded in yen is headed to is its all-time high, and that's up from the trading session of May 22nd. Great British pounds, the breakout above all-time highs took place on May the 10th out here. The point is that money is flowing into the Russell 2000. Here's another way to take a look at it. Instead of looking at all four currencies and to try to target where price is headed to, because we want to think in terms of those currencies. What I have up on my screen now are the horizontal trading ranges for the Russell 2000, both in dollars and in euros. The left-hand panel is the chart for the Russell 2000 euros. It clearly is headed for the next top of its trading range, and that is at 1436. Close at 14 or trading at 1413 as we speak right now. The Russell 2000 US dollars headed to 1674. We'll see if price can break above those levels. Compare that to the S&P 500. In the case of the S&P 500, the left-hand panel is the S&P priced in euros. You can see that too is at a new all-time high as we speak. Now it's a monthly chart. It's close to a new all-time high. It's traded just slightly higher, but it is above the horizontal trading range of 2303. This is a monthly chart. If we come in tomorrow or at tomorrow's close, the S&P priced in euros close above 2303, it is ready then to proceed to its next level. That's up at the 2459 area. Contrast that to where we are with regard to the S&P 500 in U.S. dollars. We're still in a consolidation here. The consolidation range is between 2630 and 2849. So we're still consolidating. The consolidation may not be over, but money around the world is flowing into the S&P, at least from euro standpoint, is flowing into the S&P. It is flowing into the Russell 2000. And what this tells you and I is there will be a new all-time high. I don't know when, but there will be a new all-time high priced in dollars in the S&P 500. You might ask the question, how can you be so certain about this? When you take a look historically at when U.S. indices make their market tops, they do so in all major currencies. And by major currencies, I'm referring to the euros, to the yen, and the Great British pound. Those are the only three currencies that you need to track with regard to how your instruments are performing out here. And if you're looking to be able to put some money to work overseas, well, the FTSE doesn't look too bad. In U.S. dollars, it's trading back below its swing point high from January 12th. As far as in euros, you're really above the level from November the 7th out here, so still looks pretty good. In terms of yen, this is where the FTSE is struggling. It got up to the 874,000 yen. Quite frankly, that was a triple top out here. Price was back here in this range back in 2015. Price then gets back up here. This is in terms of yen. So I want you to think of in terms, if you were a trader sitting at my desk, but I'm asking you to trade in terms of yen, and then you see that price got back up here again on May 22nd, are you going to be buying or are you selling? See, you're selling. What you like about the Russell 2000, it's broken out in every currencies. There's no dynamic of one side is selling, the other side is buying out here. But if you're trading the FTSE and you're doing it in terms of Great British, in terms of yen out here, you're not a buyer. You're not a buyer just yet. In terms of the FTSE in Great British pounds, it has broken out. It is above the prior swing point. And by the way, prior swing point, daily basis, I'm referring to January 10th out there. So being able to understand currencies and your instruments in currencies If you would like to earn or learn more about it, I did a workshop. It was last week for subscribers. You can simply come over to the homepage of TFNN. You can go ahead and subscribe to my newsletter service. What will be placed on your members page out there is that workshop right away. You'll have that for the next 30 days. You get a 30-day unconditional money-back guarantee in Mastering Probability. For those of you not familiar with Timer Digest, it's the institution that tracks the top newsletter writers across the nation, about 100 to 150 newsletter writers. I'm listed as their #1 market timer for the S&P 500 for the last 12, for the last 6, for the last 3 months, and #1 for gold as well. And it's this set of tools that I use that helps us to identify what the markets are doing. Now, I know some of you out there are saying to yourselves, what about that sell in May cycle? Or better yet, what happens to the market during a election year, a midterm election year? So we come back from the break. Let me show you what it is the markets are up against. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. Let's summarize what we know so far. We know that the SPYs moved into a previous swing point with volume, so it says that it wants to go test the high. We know that yesterday we saw one-day rate of change in the spot volatility index above plus 10%. Said today would be a bounce or a bottom. And that was followed up with a one-day rate of change of below minus 10%. That's an initiation move. So inside the S&P 500, we have signals out here that says the market wants to move higher tomorrow. We've been able to identify where the resistance is inside of the ES Mini and the ES Mini out there. So we know exactly where the sellers are lined up, and that's what we know, and that's important. Now, we've got a listener, I should say. This is Chris in Montana. And Chris wants to go take a look at the euro. He's looking for insights into the euro. Now, what I don't know, Chris, is if you're long, if you're short, but I will absolutely give you my insights. And then we'll go back to the midterm election cycles out here and what to anticipate. So, Chris, the chart I have up on my screen, albeit with a 15-minute delay, what we can see, so when markets make tops and bottoms out here, there are certain signals to look for. One of the tools that is painted on my chart are some of the Tom DeMark counts. And the black digits on my screen are the Tom DeMark setup count. I won't go and describe to you exactly what that is, but in essence, you start taking a look at each bar, and if you close over the bar of 4 bars earlier, that's where the 1 count, and you get 9 successive counts like that, the market can tend to be exhausted, especially when bar number 9 is trading in bars 5 and 6. Well, as the euro, Chris, was making a high on the trading session of April 19th, I was making a 9 count. It was inside bars 5 and 6. And on that very session, price closed below Stevie's red line. It's also the oscillator unchanged line. Really important tool out here. We can see that since that day, price has found resistance on any bounces at Stevie's red line up until today. We can also do some counts off of the high that formed on April 17th, and yesterday was the 7th wave to the downside. We like to believe that the markets sing in the key of G out here, a little Stevie Wonder music. When you get to that 7th wave move, or letter G, you can also see changes in trend. That's perfect, because what we saw take place in the euro today is a close above Stevie's red line. That is priced at 116.45. As long as price continues to trade above that level, Stevie's red line, what you should anticipate, and I don't know if we can call this a short squeeze, we can call it whatever it is, you would not want to be short, because what this tells me, Chris, is that the euro wants to bounce even higher. Now, the price level where I would first look for the euro to get to, and this is just over the coming days, I don't know that this is a long-term change in trend, but it certainly is a change in trend from April the 19th, today being May 30th out here. Where price should head to is the May 15th area. Likely, it'll get up to test the top of that area, 119.40, especially if this is some type of short covering rally that's got the bears trapped out here. This is a daily chart that we're looking at. You'd have a different message if we looked at the weekly time frame chart. We're going to stick with the daily. What other areas is it that price could move to? Well, if I look at the futures contracts out here, the next level of resistance on this bounce really becomes the bottom of its daily profile, and that's at 117.68. It's really 117.68 to 117.96, the center of the box. So that's an area, that's a logical area for price to be able to get to. If price can overcome that hurdle being 117.96, then price will bounce up, or should bounce up, to the bottom of the weekly profile. That's in the 119 area. That coincides with the value that I gave you off of my other chart, off of my other daily chart. So my take as we speak right now at 4:34 in the afternoon is the euro is headed to 119. Now that will obviously, or should, depends what the other currencies that make up the U.S. dollar index are doing, but that should put some weakness inside of the U.S. dollar. So, Chris, thanks for writing in. Hey, look, if you are listening in and you would like to send me an email, steve@tfnn.com, just do like Chris F. did in Montana and put radio show question in the subject heading. That way it'll get to me, I'll see my eyes, and we will be all set. Now, let's go back and take a look at the seasonal type cycle affiliated with 2018. And as we do that, what we're going to see is if we take a look at midterm election years going back to 1934, this is of the Dow. What the Dow typically does is tops right around that sell in May, right around the 1st of May. What we know to be the case this year is that has not happened. In fact, typically during a midterm election, this is the average since 1934, is the markets will move lower into October. So we've all heard of the sell in May, but we can also add the sell in May when it comes to a midterm election year. Doesn't matter which party it is that we're talking about. In going back that far, that provides you and I with 24 data points that make up that entire cycle. But as we go back and take a look at each of those 24 and try to identify years that maybe closely resemble what is going on in 2018, which is that the Dow has not begun moving lower since May 1st. Let's go prove that. Let's go take a look at the Dow, see exactly where we're at. Then we'll go back to that chart out there. So let's go ahead and take a look at the Dow. Let's identify where we were at on May the 1st out here. May 1st, we were right here. We closed at about 24,104. Right now, what the Dow actually did was today it tested, or very close to, the actual close of 2017, which was at 24,719. Now, that's important, but we're not going to go ahead and get sidetracked there and talk about what that means. Instead, we're going to come back to this little scatter chart of the 5 years that closely resemble 2018 from a midterm election standpoint. That would be 1942, 1958, 1990, 94, and 2014. Out here. And each of those are identified in this chart. And for the majority of those years, we see the Dow at least form a top as it's coming into the third week in July. Will that happen this year? I don't know. This is what the average of those 5 years look like. And the average of those 5 years actually suggests that in June, mid-June, the second week of June, we could see an initial decline with price moving down in towards the holiday, in towards the end of June, the July 4th holiday, and then moving higher in towards the third week in July. Will 2018 follow along those patterns? I don't know. We have plenty of other tools that assist us with regard to what price is going to do out here. One of those tools are those market profiles that we took a look at. Another tool, as an example, is what price did yesterday when it was moving and forming a bottom. Yes, forming a bottom. Forming a bottom by price moving lower, doing less relative energy, Stevie's favorite pattern out here. We may see that pattern form tomorrow morning. It's a possibility. Really depends on how this evening trades, but I'm holding that out there as a possibility. And ideally, what would take place is that pattern would form as prices coming into the top of the daily profile. But you'll have to check back with me with regard to my newsletter service, Mastering Probability, which you can test drive for the next 30 days for free. When I say free, you have to put down a credit card, but you've got a 30-day unconditional money-back guarantee, no questions asked whatsoever. Would love to have you as a subscriber. We had the Dow finish up 306, the S&P up 34. I'll check to see if anybody else has sent in an email request. We'll take a look at those requests or just continue surfing around the markets, see what valuable information I can provide. This is Steve Rhodes with TFNN.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Steve Rhodes filling in for Tom for the afternoon. Let's take a look at CRISPR. Ticker symbol here is CRSP. And they just released a statement disclosing the results of a new drug application test that was dealing with sickle cell out there, and apparently the test was not good, the test results, because it's closed at 73.59. Now, if we look at this daily chart, it's trading, by the way, right now at $56. So that is quite a huge drop. $56. Where does that really take us to? Back in April 25th, this was trading around $48, $49. That's really the previous swing point out here. So that may be the target. But if you looked at this chart, we can see that there was a swing point on March 9th that had volume of 2.4 million shares. That was taken out with 3.8 million shares. So it has some pretty decent volume characteristics. And looking at this chart, your above resistance of everything, how would you be able to identify that there could be trouble in paradise for CRISPR Therapeutics? Well, the only way would be to use the set of tools that we've been talking about for the last 40 minutes or so. If we start to do the wave count, this is part of the Chapman wave, but it is not the Chapman wave. If you'd like to learn the Chapman wave, you should sign up for Basil's newsletter service. It is as simple as that. But what I like to use inside the Chapman wave is wave number 7, letter G, that is on my chart. And if you start making your count from the prior low out here, that would be the day of April 5th, start doing your counting, then you can see on the trading day of just 4 days ago, this was on May 25th, the trading day, that made wave number G. That made wave number 7, letter number G on my chart out there. And that's how you would know, okay, this is where potential pitfalls can happen. Now, you close below Stevie's red line at 67.54. We know in the pre-markets it's trading at the $50 level out here. This is coming all the way back down to this Tom DeMark support level. This is coming back to the May area. The actual low of that session, let me see if I can get that for you, that's at 46.51. So it's trading right back into which was a level of support, or should be support, out here for CRSP. So therefore, it all depends on the time frames, right? Because if we're trying to anticipate right now at 4:44 in the afternoon, what are the equity futures markets going to do? Then you and I have to pay attention to the fact that on an intermediate term time frame, as good as things look out here, the NQs, the 30-minute time frame chart for the NQ, made wave number 7, letter number G, quite some time ago, several hours ago. In fact, this took place at 12:30. So this has one of those potential pitfalls that are out there. If price closes above that area, which would be 69.94.75, then all is good. But there is a possibility on a short-term basis. We're not talking about something like CRISPR falling out of bed by, I don't know, 40%, whatever it might be, 30% to the downside in just one day. We can take a look at the ES Mini. It hasn't yet made that seventh wave move. Moving to a higher high in the overnight action would in fact do that. And it could set up the same type of pattern that formed at the bottom, again on a 30-minute time frame basis. If you're managing your retirement funds, you're not paying attention to what's going on a 30-minute basis. You're pretty much not looking at what's going on a daily chart. You're looking at what's taking place on a weekly time frame chart, maybe monthly as well. So if I look at the Dow Equity Futures contract, no signal that I have out here either. So it's really about the NQ and the ES in the overnight action. And as good as things look, we still could see price pull back and still go achieve those price objectives that you and I took a look at a bit earlier. So that's what I see that's going on inside of the pre-market. I know there's others that are out with earnings out here. Let me see. I think some of those were posted. See if there was anything that was significant. Actually, I don't see anything out here to assist us. So CRSP. Let's go take a look at something that's near and dear to many of you out there, and that would be the gold contract. We talked about how the euro looks like it's put in at least a short-term bottom, should bounce higher, should go ahead and assist the dollar. If we take a look at the U.S. dollar index, let me do this here because tomorrow is the end of the month, and I'm going to show you the continuous contract. I'm going to hope that it will go ahead and populate with my end-of-day data here. I believe that it will. So here's the U.S. dollar index on a daily time frame. In the daily time frame, you know, we were talking about the Tom DeMark 9 setup. It is also a secondary system, could be a primary system, called the Tom DeMark sequential system. And that would be a blue number 13 that would show up on my chart, which, by the way, was yesterday. Now, the way that this works out here is you have to close below the bar of 4 bars earlier. Even though price is trading below Stevie's red line, that's 94.26 out here, 4 bars earlier, 1, 2, would be right around the price point. We're not trading below it right now. That would be the price point of 93.69. But as tomorrow dawns a new day, 1, 2, 3, yeah, that's the level. So that's the level to be looking at for tomorrow. A close below that says you're going to pull back. Pull back to where? You'll pull back to this red line. It may just be a short-lived event. Really what we were talking about with regard to the euro. Remember, the euro had an upside target that I gave you. The dollar, U.S. dollar index, has a downside target, which would be the May 15th level. Now, as we switch this, we put this on a monthly time frame, because tomorrow is the end of the month out here. If, let's say, the market decides to do something different, just because I provide you with this information, it's the information I have available to me right now. But on the larger picture, what the U.S. dollar index is trying to do, it's trying to close above Stevie's red line. Now, that price is not much below where we're trading right now. And if price closes below that, well, says the U.S. dollar index is not ready to bust it to the upside. From a monthly perspective, closing above this level that we're trading in about right now, we'll just call it $94 even Steven, says that the U.S. dollar index is ready to move higher. So with regard to what's going on with the euro, as I provided one of our listeners out there, that was on a daily time frame chart, you know, check back in with me come Friday during my 1 o'clock show, if you can, and then we'll be able to assess what the signal from the monthly chart for the U.S. dollar index is, and maybe that will assist you with regard to what is going on inside of the euro. But we were going to go talk about gold. How did I get over to the U.S. dollar index? Well, if we take a look at gold, I think the most important thing for you and I to understand is what are gold traders doing across the world. And the way that we do that is we take a look at gold priced in each of those currencies. And that's what this chart here does for you and I right now. So we can take a look at, or we can place ourselves in the position of being a gold trader in euros. We can put ourselves in the position of being a gold trader in yen, and we can do the same thing in Great British pounds. Now, this is a daily time frame chart that is on our screen. From right to left, let's start with pounds. We can see the price is up at resistance. Resistance is at the top of its January 10th swing point. In order for there to be a breakout party, and for traders to start getting long inside of Great British pounds, you need to see prices move above the October 12th level out there. Priced in euros, it's about priced in pounds, it's about 984 pounds to buy 1 ounce of gold. Steve Rhodes with TFNN will finish off Goldilocks when we get back from this break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. And, you know, sometimes because I'm a technical analyst trader out here, and we use all these tools, we might be using terms, and some of you listening will be like, what? Here's a chart, and I'm referring to swing points. I'll go back to the, we'll finish off the session here by taking a look at gold price and other currencies. Because, look, I expect we're going to see the U.S. dollar pull back. And I don't want you to think that just because that's happening, that you should be jumping on a train, going long gold, expecting that gold is going to move higher. It's more complicated than that, because you must know what traders around the world are doing. Because if gold is going down in their currency, do you really think they're going to be buying? Or are they the ones that are selling and you're the one that's buying? You need to see something moving in the same direction in all major currencies out there in order to really have a breakout, like the Russell 2000. Swing points are nothing more than where you see changes in trends, these little green dots and red dots on my line. When you break above a level of resistance or you break below a level of support, it tells you that prices now, it's like driving down an expressway, you were in traffic, now you're out of traffic. What are you going to do? You're going to floor it on the gas pedal. That's in essence what the market is doing all the time. It's looking to get out of those traffic zones. Well, as we take a look at gold, pricing these other currencies out here, if you're a trader of gold and yen, right now you are down below a swing point. So you're selling. You are not buying. Now, I don't know who's the one that has the more power, those in yen or those in U.S. dollars. But in U.S. dollars, we have not been able to close back above a swing point. That would be the actual low for March 1st out here. So even gold traders in dollars aren't that enthused out here. If we take a look in terms of euros, price is trying to move higher. Right now, you can buy an ounce of gold for 1,115 euros. It'd be 1,301 U.S. dollars. It'd be 979 pounds out here. But not until we can see resistance levels taken out, and they haven't been, inside of euros, inside of Great British pounds, and inside of dollars, this is just really a sideways trade. Folks, thanks so much for being here. Enjoyed spending time with you. Tune into my show, Trader's Edge, at 1 o'clock each day at TFNN. Come on over to the homepage at TFNN.com. Sign up for Mastering Probability. 30-day money-back guarantee. Love being with you. Have a great afternoon, great evening. Looking forward to seeing you again soon.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.